So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to grow your wealth. Hey, I'm your host, Brett Swarts, and each episode I am joined by some of the best real estate minds, financial and wealth advisors in the world, where they share their ideas, deal stories, and inspiration, so together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He is the founder of Sense Financial. He is on a mission to help you get checkbook control of your IRA, right? And so there's tons of options. There's ways to invest in hard money lending, into real estate, and not have to be stuck in the traditional securities, stocks, bonds, mutual funds world with your IRA, so you can create and preserve more wealth. Please welcome to the show with me, Dmitriy Fomichenko. Dmitry, how you doing?
I'm doing great, Brett. Thanks for having me. Excited to be on your show.
Excellent. Would you give our listeners a little bit about your background and your current focus?
Sure. So as you can hear from my accent, I'm not from here. I'm an immigrant, and many people who actually, by the way, born here don't realize how great this country is. So back being born and raised in the former Soviet Union, I love this country. This is my country now. By the way, I'm a citizen. I didn't even keep my Russian citizenship. So love this country, and glad to be here, because not only it gave me a freedom, but also it has so much potential for the opportunities, starting a business and helping folks. But my background is in electromechanical engineering. That's what I went to school for, studied here for a couple of years as well to translate my degree, worked in the field until I was laid off, which forced me to go into and look into for something else. I ended up being recruited with a local financial services firm. And about the same time, I started investing in real estate. And then a couple of years later, I transitioned full-time in real estate, was working with the local real estate investment firm. And I was given a task to start a department within a company to offer self-directed retirement solutions for our clients. So I did that for about a year, and then I transitioned on my own. And in 2010, I started Sense Financial. And so what we do is we provide our clients with the solution, giving them the opportunity to obtain a checkbook control over their retirement accounts. Because with the conventional IRA and 401k, your investment options are always limited and confined to the stock market. But IRS doesn't give you that limitation. IRS says you can invest in virtually anything, but the custodians that you're with place those limitations. So we basically unlock your retirement account and enabled you to invest in alternative assets.
Love that. Absolutely. We're going to dive into those strategies here in a minute. I want to take a step back, though, and I want to connect some dots for our listeners. And you talked about the gift of freedom for America and how much you appreciate that. And I also want to connect how you provide that same freedom for folks now with the IRAs, right? But more so, I want you to focus on the gift. I believe we've all been given certain God-given gifts, Dmitry, and they're used to bless others. So what was that one gift that you believe you were given, and how does that help how you help people today?
Well, my life has definitely been a journey. Going back to the early years, being a teenager, I had the entrepreneurial spirit, and actually remember doing a few different things. One of the first things was actually selling ice cream. We lived in a town that was in basically there was a major railroad hub, and a lot of trains that were going south with vacationers will stop in our town. So I will bring a box of ice cream, and I sold it, to the vacationers. Made some money. I'm a part of the basically I was born in a family of 9 children. I'm one of 9 boys. So my parents definitely had their hands full with all of us, and was just a way to contribute to the family. But coming into this country, it was great because there is so much opportunity, and being in financial services and then in real estate investing, all of that was a great foundation for me to start the business. And also being an engineer, although I didn't really enjoy working as an engineer on the manufacturing floor, dealing with many problems that would arise almost daily, but that taught me some very valuable lessons. So now doing what I'm doing and creating the systems for our clients to plug into, I really enjoy what I'm doing, and I'm practicing what I'm doing as well. I use retirement accounts to invest in alternative assets and maximize it as much as I can. And it's just a great way to be able to grow your wealth in a tax-deferred environment. So I believe in that. I practice this, and I do help my clients build wealth using tax-deferred retirement accounts.
Absolutely love it. Thanks for connecting those dots. And by the way, I'm also a client of Dmitri's. I used part of an IRA that I had, and have the checkbook control of that, and so that's been an absolute a pleasure to work with him and his company. So highly recommend them, and would use them again. That being said, you talked about a little bit how you became fascinated once you had the job or the task of the company you're working with to give people alternatives, and then you quickly found out there was a big need in the marketplace. You're looking around going, oh my gosh, no one's really doing this. So walk us through that first, hey, okay, I'm going all in and I'm going to start my company. Give us that first big hurdle that you had to overcome.
Well, maybe expand on that a little bit just to clarify. The company that I was working for were providing turnkey investment properties to our clients. And at that time, 2007, 8, 9, when the market crashed and people also financial situation changed, some people either lost their jobs or had their incomes affected, or maybe even lost some properties, had their credit affected. So they couldn't continue to buy, even though it was a great time to actually buy. You want to buy low and sell high, right? So it was a great time to buy, to continue to invest in real estate, but people couldn't do it with their savings, but they had money in retirement accounts. And so basically, because of my background in financial services and knowledge of different retirement accounts, and also being a real estate investor myself, I was given a task to start a department within a company, because none of the companies that we actually worked with, we tried several different custodians, and none of them worked out long term. We worked with them for a few months, and then we have to look for somebody else, because none of them were able to provide good enough client services. And that's actually my, I think that's my strength, because I'm kind of perfectionist in a way, to a certain degree. I like things to be great, and I'd like my clients to have a great experience. And so it was hard to find that. That's why I had to start something from scratch. And I was blessed to actually do this within within the environment that allow me to do this. And then about a year later, I decided to go on my own, and that's all we do. We basically, the two services that we offer now is a checkbook IRA. That's the first thing that actually I did. The IRA that gives the client checkbook control. And then later, about a year later, I discovered that there is a solo 401k, and we added that to our services. And our business, it changed drastically. So we actually, right now, we're doing about 90 to 95% of our clients are solo 401k clients, and about 5 to 10 IRA clients, because solo 401k is just so incredible. And we'll dive into that.
Yeah, let's dive into that right now. Actually, I think that's our listeners who are listening right now. If they have a 401k or an IRA, but let's focus on the 401k. It's a big part of the wealth transfer. About 17 to 20 trillion dollars of assets are going to transfer from one generation to the next in the next 20 years, and this is known as the baby boomers. In fact, there's about 77 million retiring in the U.S. There's about 77 million baby boomers in the U.S. alone. About 10,000 every day are turning 65. And so a big part of that is this 401k, massive amount that they've built up over the last 20, 30 years of their working life, right? And so now they're looking for, they're not necessarily excited about all-time highs in the stock market. They're concerned with what could happen, what could change in the world, and they want some diversification, and move it into real estate. So focus on the ability, step one, 401k, and then step two, get into a solo 401k.
Yeah. So, well, first let me just explain, because many people probably not aware what that even is. So an IRA is individual retirement account. Anybody can do it. If you have income or if you have existing retirement accounts, you can open an IRA. An IRA typically held with a custodian. You must have a custodian, that's required by the IRS. And custodian gives you the investment options. So if you go with Schwab or Fidelity, the custodian will give you the investment options. And again, custodian has the power to limit your investment options. So if you're with Fidelity, you only can invest in investments that are offered by the Fidelity. Now, a self-directed IRA is a custodian that allows you to pick alternative investments. They don't limit your investment options, but the downside of that is that you have to go through the custodian for each transaction and each investment that you make. So that increases the cost because they charge fee per each transaction and each asset that you own inside of your IRA. And also it creates an inconvenience because you have a middleman that you have to deal with. So the checkbook IRA accomplished, or checkbook control accomplished by creating a special purpose single member LLC that your IRA owns, and the client, you control that as a manager. So the IRA invests into the LLC, and now as a manager of the LLC, you have checkbook control. So you literally have a checking account in the name of the LLC that your IRA owns, and you as a manager can simply write the check and you can buy a piece of property. So that's how that works. Now, solo 401k is a little bit different type of animal altogether. A solo 401k is a 401k again, but solo means that it's designed for those people or individuals who either self-employed or own a business. Has to be legitimate business with earned income. And number two, which is very important, you cannot have any full-time employees working for you. So it's you can have part-time employees under 1,000 hours, but no full-time employees. And the reason for that, because if you have somebody working for you as an employee over 1,000 hours, then the law requires that you offer them retirement benefits as well. And solo 401k cannot accommodate that. But solo 401k has some tremendous benefits. Comparing to an IRA, it does not require a custodian, so there is no need for a custodian. And you don't need an LLC to gain the checkbook control. So we do that by creating a trust instead of using a trust company or a custodian, and you become the trustee. So as a trustee, you control that. And again, talking about the taxes, again, my clients are those who own a business or self-employed. And obviously, if you get into the business or you become self-employed, one of the great benefits of not working for a paycheck, because when you work for a paycheck, there is a limit. You have a salary, or you get so many dollars per hour, and there is a cap. You reach a cap because there is only so many hours a day you can work, right? Well, when you work for yourself, there is really no cap. You remove that cap. You can. There is unlimited investment income potential that you can generate. So, and obviously most people don't start there, but that's the goal. So if you get there, or if you're about to get there, then the problem with the larger income is the larger taxes. The more you earn, the more you have to pay in taxes. Well, solo 401k is a great tax deferral because it allows you to shelter up to $57,000 of your income from taxes. And if you're a husband and wife team working together, then you can double that. I mean, imagine sheltering over $100,000 of your family income from taxes. What that's going to do? I mean, that's going to bring your taxable income lower. You certainly will be in a lower tax bracket. So you're going to be paying lower taxes in the lower bracket. So the savings can be pretty amazing. So it's a great tax sheltering vehicle, but also gives you unlimited investment potential.
Amazing, right? So just a quick little recap. So solo 401k, you need to be self-employed or own a business. You can have no full-time employees, 1,000 hours or less for some part-time employees. No custodian, no LLC, just the trust, and you're the trustee. And you have what's called checkbook control, where you just write a check. You want to invest in real estate, you write the check. You want to invest in stocks, bonds, mutual funds, you can write the check. And you can also shelter some income. So let's say you made $100,000 extra this year, and you're, let's say, at $350,000, let's call it $349,000 of income. Okay. And now if you put $100,000 into that, you drop below that 250 mark, you're lowering your overall tax bracket and your taxes. Is that a fair summary?
Yeah, that's exactly right.
Yeah, we call that tax optimization, right? So pay tax when and if you want to, based upon the laws that are given. They're all legal, right? But you got to make sure you get with a Dmitriy, right? You get with us at Capital Gains Tax Solutions, because we also have a similar thing with the Deferred Sales Trust, in that you can sell your highly appreciated asset, move it into the Deferred Sales Trust, and then you can just decide when and if you receive that income. And so some of our high net worth clients, they have, let's say, a $500,000 income coming from an asset that they're taking, and they're fully depreciated, and they're just taking all the income and paying all the tax. Well, they can sell it, move it to the Deferred Sales Trust, and let's imagine that trust is now producing $500, but they don't have to personally take the income. They can just allow the income to compound and build on top of itself, and therefore their tax bracket is being lowered by $500,000. So it's similar in the way the 401k works, and then you can turn it on later and start receiving that income, perhaps when it's more an optimal time for you to do that. So that being said, so keep digging in more. Okay, so what are some of the restrictions, though, we want to be careful of once we have it set up? Walk us through the cash flow of the real estate deal. Let's say I had a $1 million 401k. I put it in the solo 401k, and I go buy a $3 million commercial real estate property. First of all, can I get leverage on that deal? And then second, what happens to the cash flow?
Well, this is still a retirement account, whether it's an IRA or a 401k, it's still a retirement account. So the concept is still the same. Really, the difference, well, obviously a solo 401k, those who hear about this for the first time, has some really unique features. Like I talked about the ability to make large contributions. But ultimately, it's a retirement account. So the rules are the same. You're able to, the contributions are tax deferred, so you're minimizing your tax liability. You're sheltering your income from taxes. And then it gross tax deferred, but you cannot touch the money until your retirement age. So it's really it's not for your benefit currently, it's for your future you. You'll get the benefit from that currently. Now, there's some features that allow you actually to benefit from it even currently. We can touch about that. That's participant loan feature. But talking about just the concept. So when you invest into alternative assets, just like when you use your traditional IRA or just a conventional 401k and you buy stocks, well, stocks pay dividends, and then when you sell the stock, you got the gain. Well, all of that gain and all of that income stays within an IRA or within a 401k. You don't get to take that out and use that personally. Now, you can do that. If you take it out, you're going to have to pay taxes on that and penalties if you take premature distribution. So the same rule applies within the self-directed IRA or a solo 401k. But the key is you're able to grow it in a tax-deferred environment. So if you have an asset, like you said, this property that produces X amount of dollars, it goes back into the 401k, not being taxed. So you're able to grow that and then eventually reinvest and continue to reinvest. So you're actually taking advantage of the deferred growth, and you achieving that growth much quicker comparing to if you had the money in just in your personal saving account or personal investments.
Love it. So I pull $1 million out. I don't pull it out, but I put it into a solo 401k. I use that checkbook to write for a down payment. I buy a $3 million asset. All of the cash flow that's coming in, I just roll it back into my 401k. So I'm not being taxed on that. It's all in deferral state. Fast forward, that $3 million property sells for $4 million, 5 or 10 years later, or whatever it might be. Can I roll all of that gain as well into the 401k and defer all the capital gains tax?
Well, there is no capital gain tax in a retirement account because all that gain is not your personal gain. It's a gain of the 401k. It's exactly the same concept as I mentioned earlier when you buy a $3 million worth of stock and then a few years later you sell that for $4 million. Well, it's not you're controlling it. You're selling the asset or the stocks, but it's 401k owns it. So, and 401k is tax exempt. So you're not paying the taxes on the gain because it's inside of a tax shelter.
Excellent. You'd only be paying on the million if you took it. So if you cash out of everything, you just have like that 10% penalty and you'd pay ordinary income tax on that. Is that what that would be?
Yeah. So normally how it works inside of a retirement account, whenever you take a distribution from a retirement account, now there is a pre-tax retirement account and there is a Roth. So there is a difference. The Roth is you contribute post-tax and qualified distributions are tax-free. The pre-tax retirement account, you contribute pre-tax, you're not paying the taxes on the contribution, that lowers your taxable income, and then it grows tax deferred. But when you take a distribution, you do pay taxes on the amount that you take out as a distribution. Mm-hmm. So you don't pay the taxes on the sale of the property. Let's say you sold and then you decided to pull $100,000 out, mm-hmm. and you have, your 401k is worth $1 million or $4 million. Well, it continues to be tax deferred. You're only paying taxes on the amount that you take out. Mm-hmm. Okay. Now back to your other question about the leverage. So you can use leverage inside of a 401k, and the way that it works. Because IRS rules do not allow you to provide a personal guarantee for a property that you're buying inside of your 401k. Therefore, you must use non-recourse loan. And non-recourse means that there is no personal guarantee. So the property is the only security for the loan. The loan is given to the 401k, and most conventional lenders don't do these types of loans. So you got to go with the select lenders who specialize in that. And they're out there. We actually have a list of those lenders on our website. Over the last 10 years, I assembled the list of lenders who specialize in this. So it's actually fairly easy to get the loan, assuming the property qualifies. Now, the lender is taking a higher risk because they can't come after you if you default. So the property is the only security. So typically those lenders, they do require 40% down. And the rates are a little bit higher than the conventional. But again, you can compare that with the conventional because that's going to be apple to oranges comparison. But you certainly can get, you can buy a property. I've done it myself. I own a property with leverage. And it's fairly straightforward. The loan is given to the 401k, and you collect the rent, and then from that you pay the mortgage.
Excellent. Now let's dive into the participant loan feature, and this is something that I actually personally did with Dmitry, for my IRA. So I sorry, that was the 401k actually. So for the 401k, I actually did a loan feature there. So walk us through, Dmitry, how that works and exactly what that is.
Yeah. So some of you who have a 401k with your employer or maybe had one in the past, you may remember that you had the ability to borrow from your 401k, take a loan. So the participant loan in the 401k works like this. You're allowed to borrow from your 401k up to $50,000 or 50% of the balance, whichever is less. Generally speaking, it's a 5-year loan, and you have to pay it using amortized payments over a period of 5 years. The interest rate is set at prime plus 1%. And the loan can be used for any reason. So this is I call it like you creating your own private bank that no one is going to turn you down. I mean, think about this. If you ever have a financial need, if you have an IRA, there is no way you can borrow from an IRA. It's not allowed. So you will have to take a distribution. And typically, if you take a distribution, if you need the money, if you do it before normal retirement age, there's going to be taxes and penalties. So you may end up losing half of what you're taking. I mean, if you need $10,000, you might have to pull out $20,000. So half of that goes to cover the taxes and penalties. Well, with the solo 401k participant loan, you can take money anytime for any reason. Again, limited to $50,000 or 50% of the balance. And you can use those funds for any reason whatsoever. Now, also to add, it's not something that you want to abuse. You don't want to pull out this loan and go buy a new car or a boat. I mean, if you need a new vehicle, you can get financing at 3% nowadays. So it's very cheap money. Why would you borrow from your own 401k where you can invest this money and get 10, 12% or more return on your money? So be wise about this. But it's a great feature that it is there whenever you need that.
Excellent. So well said. So hopefully you're gathering here that you're going to need someone to guide you through this, right? And this is what Dmitry provides at sensefinancial.com. Give your IRA a makeover, give your 401k a makeover here, and take back checkbook control and have some options here to grow your wealth. Make sure you reach out to Dmitry if he can help you with that. With that being said, Dmitry, are you ready for the lightning round?
Well, just to maybe expand on your last comment, I was just thinking about this. If some of your listeners there, you're thinking, well, I don't have any experience investing in alternative assets. I'm not an investor, or, I don't really understand this stuff. Well, if you've just been investing, like most people in conventional retirement accounts, investing in the stock market, you've seen what's happening. Basically, the stock market is like a roller coaster. It goes up and then it goes down, up and down. And then hopefully you'll do okay in the long run. But the problem is that you don't know what the future is going to bring. I mean, go back to 2007. I've seen some of my clients lost half of their portfolio. So if you lose 50% of your portfolio, then you need to have 100% gain just to get back. I mean, think about that. You don't have to go very far. Go back to like February of this year when the pandemic hit and the stock market dropped. I don't have much money in the stock market, but little money that I have, I had 30% drop, about 30%. And I mean, it's pretty significant. Now, that's little money that I had. The majority of my portfolio was in real estate or private lending, and that had almost zero effect. Almost zero. So now, thankfully, the stock market recovered. For me, it was about maybe 4 or 5 months when it gained back. And that's something that is, I think, unheard of in the history. It did not happen that quick. I mean, normally it takes years to recover. But I think because of the policies of our president, that happened. which again, don't count on that in the future. The beauty of the self-directed retirement account that you have the whole wide range of investment options, and you don't have to know it all. There are people that can guide you. Again, you can talk to myself, you can talk to Brett, and there are other professionals who can help you, guide you how to make the right investment decisions. You don't have to know it all, but the point is that it puts you in the control and gives you the options.
Absolutely. So well said. Yeah. And that's personally how I have most of my wealth: senior housing, mobile home parks, multifamily, more recently out of California because the prices are just through the roof. And there are opportunities. So absolutely reach out to Dmitry or myself, and we can help you walk you through that next step. So that being said, are you ready for the lightning round, Dmitry?
I sure am.
All right. So knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you'd make sure you do?
Well, when I was investing in my investment experience, I made some mistakes. And one of the things that I learned from that, I think I was doing too much too quickly. And I think the greed was driving me. So that's definitely a lesson that I learned. You don't chase building wealth quickly, because that maybe you're chasing a speculation, and that's not the way to invest. I'm okay with building wealth slowly using proven strategies. And if you do that, you'll get there.
Love it. What is the one book you've recommended or gifted the most in the past year?
One book that I want to mention is that was a life-changing for me is a Cash Flow Quadrant by Robert Kiyosaki. It wasn't in the last year; it was earlier, a number of years ago that I read that. But it's a great book that anybody can benefit, and that basically teaches you where you want to be. Do you want to work for the money, or do you want your money work for me? So I'm on the right side of the quadrant. I'm an investor. I have my money work for me, and I have a business that works for me as well. So you want to get on the right side of the quadrant, but you got to start somewhere. It's a great concept.
Absolutely love that. Yep. Check that one out. Cash Flow Quadrant. Give me a mobile or digital resource you recommend for your business.
The resource that can you clarify the question?
Yeah, like a mobile or digital resource. So it could be an app, it could be a website you use, it could be a software. What's something that you use for your business that you found very, very helpful?
Oh, for the business that I personally use for a business. Mm-hmm. Well, I use basically a scanner, the app. I think it's called the Fast Scanner. That's just one of the resources that I use. And basically I store all of my receipts that way. I just take a picture of it, and it stores an electronic copy of the receipt. I don't ever, have to store the receipts. And you can use it with all documents pretty much, not just receipts. It's a very useful tool. I basically gone away from the paper storage. I don't do that.
Yeah, go paperless. That's very smart. Yeah. Maybe a favorite leadership quote or theme that you strive to live by.
It's a golden rule. Do unto others as you wish others do unto you. And when it comes to a business, is basically just the concept of that I learned that early on. You want to find a problem. Or you want to identify the problem, and then you want to provide a solution, and just focus on helping other people. And as a result, you're going to get blessed. You will be blessed, and you're going to be rewarded both financially and with friendships and in many other ways. And that's what I did. I found that there is a need, and I provide the solution. And I focus I'm not really necessarily focusing on growing my business. I want to help my clients, and as a result, that will happen naturally.
Love it. So well said. What are you curious about right now?
What I'm curious about is the future, what the future is going to bring. Again, coming from another country and seeing how great this country is, and just It's disappointing to see the direction that our country is moving towards socialism. There is nothing like United States, and I hope that all of us, people who are thinking for themselves, can really, stop this madness and keep what we have. I really wish we don't lose our country. We're just moving in that direction. So that's, kind of concern that I have.
Yeah, so well said. So well said, and I couldn't agree with you more. Let's more freedom and the better. So
you don't want government control. When you give control to the people, it explodes in all possible ways in prosperity and everything else.
Absolutely. So the next question is, how do you stay centered in your values, Dmitry, after all your success and helping so many people achieving so much from moving from another country to America? How do you stay centered in your values, and how do you stay encouraged to charge forward to reach new goals?
Well, if you go to my website or listen to look at my presentations, I use a lot in Proverbs. Proverbs is a book in the Bible that has a lot of wisdom for life. So Bible is my instruction for life, and I read it daily, and I do my best to apply it in my life, and that's how I stay focused.
Absolutely love it. Likewise, same here. And I love the book of Proverbs, and I read the Bible daily, and I'm a Christian. So that is for me, the best way to stay centered as well. So for our listeners, Dmitry, who want to get in touch with you, what's the best way for them to connect with you?
The best way, probably go on our website, sensefinancial.com, and sense is like common sense, SENSE, sensefinancial.com. There you can submit a form and request a one-on-one consultation with me. I'd love to offer that to your listeners, because there is so much more that we can talk about that, and it's impossible to cover every possible scenario, but I'd love to speak one-on-one with your listeners and just help them maybe figure out a better direction for their life. You can also find me on Facebook, on LinkedIn, and on Bigger Pockets.
Excellent. I know that's what you did for me, and it was so helpful, and that's why I became one of your clients and used the solo 401k. So with that being said, thank you, Dmitry, for sharing your wisdom, your knowledge, the details on the solo 401k, on IRAs, and I want to encourage you to keep using the gifts you've been given to bless others. And also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions Podcast. As always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust and or hiring Dmitry to get your 401k and checkbook control, or your IRA, so you can create and preserve more wealth. Please share, review, subscribe to the channel. We so appreciate you listening, and go bless some people today. And with that, we'll talk to you soon. Goodbye, everybody.
Thank you.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.